So good morning, guys. This is Kev, and today we'll be looking at Eurusd and Gbpusd. So let's begin so that we can determine our bias. Today is on Friday, and as you all know, we are coming to an end of the week. So what do we expect? We expect that the market is closing. So let us go to the weekly time frame. This is our weekly candle. This is our weekly candle. This is our low. This is our high. This is our open right here. So we're waiting for it to close. And remember now that the high is 1.7625. We don't expect that today we'll have the market exceeding this high because it has already formed the high. So we want to expect the low, and this is the structure. Like the candle opens. Okay, let me use this one here. The candle opens, forms the low, then goes to form the high, then it closes. So this is what we are waiting for. We're waiting for the market to, it opened already, formed the low, that is manipulated the open, went ahead from the high. So now we are waiting for it to close somewhere here. And today being a Friday, we'll know at what time or at what point will it close. So that's the narrative of a candle. So here, like I said, this is the low. This is the low, and let me try to increase this font. This is the low. The market opened right here. Market open. And then this is the high of the weekly candle. This is the high of the weekly candle. So we are waiting for it to close. Now that today is a Friday, so we are waiting for the closure. And as usual, we don't expect the market again to exceed the high, right? We don't expect the market to exceed this high right here. Why do we say so? Let's check with the currency strength. Then likewise, let us check with the Forex factory to confirm if we have high impact news today. So from the calendar, today is on Friday. Today is on Friday. So look, we don't have any high impact news. And actually this one happened 4 a.m. 4:15 a.m. Hello? Morning, bro. Go fit this year. Yes. ulienda hivyo ikakata. Okay. Sorry for that interruption. So this is let me clear off this one. These are low. This is the open. It first of all opens. We are dealing with this candle here. This is the weekly candle. We are dealing with this candle. So first of all, it opens. That is on Monday. Then it forms the low, right? After forming the low, the market pulled bullish until it formed this high right here. Then now what is happening today? Today is on a Friday. So we are expecting the market to close. Okay. And let us now go down to the daily time frame. So this is what was happening. This was on Monday. Let me use the Fibonacci time zone so that I can indicate all the days. So this was on a Monday. Tuesday, Wednesday, we're supposed to start from here. Tuesday, Wednesday. This is Wednesday. Then Thursday, yesterday. Thursday. And then today is on a Friday. Now, what do we expect today being a Friday? Now, on Monday, this is what we had. We had a bearish candle. On Tuesday is where we had a reversal to the upside, because when you look closely, so this is the Monday candle. Okay, so this is a bearish candle. What happens to a bearish candle? So it first of all opens. After it opens, it has to form the high right here. Then it pulled downwards, formed the low. It formed the low, then it closed right here. So Tuesday it formed our reversal, because look at this candle, it closed just above it. This is a Tuesday candle, so it closed above the Monday low. Then on Wednesday is when we pull to the upside, likewise on Thursday. So what is happening today on Friday? On Friday, we expect that this gap, will be covered. This gap will be covered. At least we might occupy the mid of this gap. So So you expect that today the market will push to the downside. That's from the daily. And even the daily candle right here, it is bearish. Okay. Yeah, it is bearish. So let's go down to the 4-hour time frame and see what is happening. And you might be wondering, which strategy am I using? I use the candle range theory, and just to take you through the candle range theory, these are bearish, a bullish market. So let's say these are our candle, right? These are our candle. Just allow me to demonstrate here what happens to the candle range theory. This is your candle. I'm demonstrating a bullish market. So when will you buy? Okay. So this the first candle forms what's called a range. It will form your range. Okay. This is your first candle. It will form your range. So what happens if this is your first candle and you want it to form your range? You mark the high and the low of that candle. You mark the low and the high of that candle. So as I said, this is our range candle. This is our range candle. Then the second candle right here is our manipulation candle. This one here is our manipulation candle. This is our manipulation candle. Then the last candle now, it will form your distribution. The last candle will form your distribution. So the distribution now is what will finish your entry. Like the first candle, say this one is the 5 a.m. It can be the 5 a.m. It can be 9 a.m. It can be 1 p.m. It can be 5 p.m. in the evening. So depending with your time zone. So this candle can form anywhere. Then when you see this, you have to wait. And where do you wait from? I use the 4-hour. That's where we are heading to. 4-hour candle. So I'll go to the 4-hour, check with the range. If I find the range, then I mark the low and the high of that candle. Then now I wait for the manipulation until manipulation is done. That is when I'll enter on the third candle. And how do you enter? You use the 50% of this manipulation candle. So I'll come here with my gun box, mark the 50. So where 50% is, this is where you enter now. You enter right here on the 50%, then target the range high. So that's the simple strategy that I use, and it can happen on the weekly, on the daily, on the 4-hour, on the 1 hour, 15 minutes, 30 minutes. So depending with whether you are a scalper, you are a swing trader. So let's get back to the charts. So we are here. We're here, man. So we look at this. This is where it happened. This is where it happened. We had this Tuesday candle. We are still on the daily. This Tuesday candle is the one that created the manipulation. That's why we have the distribution on Wednesday and Thursday. So today is on Friday. We have these gaps, very huge gaps, but we don't have news today, so we don't expect that we have a big volume so that it can push these candles maybe further to the upside or to the downside. And again, an additional information. Let's go to the uh, currency strength and we check. So as you can see, the daily performance of these currency pairs. This one is Euro USD and this one is the dollar. So Euro USD is weaker than the dollar. So what do we expect? We expect the market to go down because the euro is weak and the dollar is strong. So when the dollar is strong, we have the base currency as the euro and the what do we call it? We have the base and I've forgotten the other term, but that's it. So euro is weak, but it counter the dollar later on. Now that GBP is stronger, will it counter the dollar? But today is on Friday. Let me check the futures. This is where I get the insight at some point. Yeah, now look at this. Where do you have the USD? Euro USD. Okay, this is the dollar. The dollar is +3. Okay, and our euro is down here, -0.7. So the dollar is stronger than Euro USD. If you want to know this, you have to go to what you call financial visualization. Go to futures, you will see this chart. It will enable you to understand which currency is strong, which currency is weak. Now that we understand that euro is weak and it's our best currency, as you can see, euro USD. So what do we expect today? Now that euro is weak, the dollar is stronger, so the dollar will be pushing to the downside. But how long will it go? We don't know, because we have no high impact news today. And this one already happened at 4:15 a.m. President Trump spoke at 4:15 a.m. So depending on your time zone, don't think if you have a high impact news today. So let's go and check with the 4-hour time frame. This is our 4-hour time frame. Today is on Friday. So what do we expect today? We have a gap, a very huge gap here. So we expect that the market will kind of drop to this level. Then maybe on Monday we'll continue bullish. Yeah, and we are closing the week. So I don't expect to see today that the market will be bullish and going overboard up to this level. Okay, why am I saying so? Look at this. Right here we have an order block. Those of you who've been in the market, you understand what an order block is. So you have an order block right here. You have an order block right here, and you have to understand that when is an order block valid? An order block is only valid if it had a liquidity sweep. Do you have a liquidity sweep here? Yeah, where is it? It's here. Look at this black candle and the green candle. The black candle was manipulated. So I can confidently say that I have an order block right here. Now, what do we expect? We expect now that we have another advantage. We have a fair value gap right here. So this fair value gap must be respected. So the market will come to the downside right here and move to the upwards maybe next week. But for today, as you can see, we opened bearish. Now, how do we enter? When will we enter this market? We have to wait for our setup to happen. Yeah, you have to wait for you have to mark your range. You have to mark your after the range. You have to mark your manipulation, your distribution candle. Yeah, and what happened here? This one is the 9 a.m. candle yesterday, and the 1 a.m. candle. Look at what happened. It closed with the body, so it's still telling us that we are still bearish. We are going bearish because this candle here closed with the body. So we can mark the 50% of this. We can mark the high and the low. Then your entry should be on the 50%. Then target the 50% of the fair value gap. How will you know that? Go to the 1 hour. When you go to the hourly time frame, look at that. Look at those gaps. So this one here, we have a gap right here, and we have another one right here. Now, which gap will you go for? Right? Which gap will you go for? Look at this. We have a gap here, and you also have another gap right here. So which gap will you go for? Let me mark this properly. So according to the 4 hour, this black candle, its low has been close to the body of the 1 hour candle, this one here. So as usual, at the 50%, just use our strategy at the 50% here. And now that our 1 hour candle is the one that we will use, so to mark our order block, look at this one close to the body. So it's still telling us that we are still moving to the downside. So let's expect for the London open at 9 a.m. We still have some time. So this green candle will be our range. Now that we have a fair value gap here, what do I expect? Let me simulate it here. This candle is the 8 a.m. candle. So this 8 a.m. candle will form our range. It will form our range. So it might tap into that FVG that way. Fair value gap. This is our 8 a.m. candle. I'm simulating this candle here. What might happen now that we have a gap right above it here? Then the 9 a.m. candle will act as our manipulation candle. So when it is manipulated, it means it tapped it to the fair value gap and closed below the high of this candle. So if the 9 a.m. candle will do this, right, then automatically the 10 a.m. candle will sell. The 10 a.m. candle will sell. Okay. So if this is the 8 a.m., I'm simulating this candle is this one here. So this is the 8 a.m. candle. 8. We are on the hourly time frame. 8 a.m. candle. So if this candle here, the 8 a.m. candle will be our range, then the 9 a.m. candle, 9 a.m. 9 a.m. candle will form our manipulation. Then at 10, that is when we'll have at 10 a.m. That is when we'll have our distribution. So we are waiting. Yeah? I marked this is like my, some people call it Asian range. I marked the high and the low of the range. So what do I expect? We have a fair value gap right here. Before I sell, what will I see? I have to see something like this here happening right here until the 9 a.m. forms our manipulation. Then at 10, that is when I'll enter a sell. Okay. At 10, that is when I'll enter a sell. Where do we target? You remember our 50% on the 4 hour? It was on the daily, not on the 4 hour. Yeah, but you can target there. 4 hour, not bad. See that? So this is my analysis on Euro USD. That is what I'm expecting. I'm expecting the market to rise to this gap, then continue to the downside. Continue to the downside. So that's what I'm expecting today on Euro USD. Okay. So not unless unless you have a question. Are we selling Euro USD? Let me put it here. So that is our poll today. We're selling Euro USD. If you agree, tap yes. If you don't agree, say no. Right? So this is what I am anticipating on Euro USD. Actually, you have to peer through this gap FVD right here, then continue to the downside. Or if at some point the market might be volatile, you never know, and come up to this level. So in case of that, I'll mark my entry there, my stop loss above 19, 20 pips stop loss, not bad. Okay, yeah. So drawdown is something you're not supposed to be scared of because it's preparing your buyers. So even if I see these candles coming up to this level before they continue to the downside, I'll just still be okay because my stop loss is kinda far away from these gaps, because at some point we might target this gap, but later on you find out that it has speared to the other one here, and you have to be prepared psychologically for anything. Okay, now let's check on GBP USD. GBP USD. Let's check on GBP USD. Okay, GBP USD. Let's see what is happening on G. So as usual, you have to clean the charts. Then I'll start with the weekly time frame. These are weekly candle right here. And as usual, today is on Friday. So we expect the market to be closing. This is the low of the week. This is the high of the week. This is the open. It opened right here. Okay. Now, after it opened right there, what do you expect? This is the open of the week. It starts Monday mid. Then this is the low. This is the low. Guys, subscribe to my channel as well so that you can get notifications when I'm live. This is the high. This is the high. This is the high. Now, we want to close. We don't know where it will close from, but we don't expect it to go past this high. So, we'll just be, this is what happens. The candle open. Thanks for the likes. It forms the low, then forms the high, and it closes. So today is on Friday. We expect that we are closing the week. We don't expect it to go past our high. No, we expect it to close somewhere here. And now that it's closing, what do you expect? It has formed the high. So when it closes, it retraces back. Okay. Yeah. So we don't know where it will close from. So when you go to the daily time frame, this is interesting now. Look at this. Let me use the Fibonacci time range so that I can mark. Look at that. What you're expecting today is this candle has just, it has not formed the low. It just opened, then started moving to the upside. Yeah. So we expect it to move a bit kind of higher, a little, then retrace back maybe to 50% of this candle. Okay. Now, let me mark these days. This is Monday. Sorry. Yeah, this is what I wanted, the Fibonacci time zone, so that I can demarcate the days. Yeah. So this was on Monday. This is Monday. We have Tuesday right here. We have Tuesday. We have Wednesday. We have Thursday. And Friday. Today. Today is on Friday. Today is on Friday. So Monday, Tuesday, Wednesday, Thursday, Friday. What do we expect on Friday? We don't expect the market to exceed the high. We expect it to retrace back maybe 50%. Then it will continue bullish later on. Now let's get to the 4-hour and see what is happening. Let me just take you back a little on the daily. Look at this. This one is this is our range. This formed our range. This one manipulated. It closed below this range. So what do you expect? We expect now to go to the 50% of this candle, then retrace back downwards. Okay. What do we expect here? So we have a gap somewhere here. Let me mark the 50% of this range of hours. This is our 50%. I just marked the 50% right there. So when you get to the 4-hour, this is what is happening. This is what is happening today. Look at this 5 AM candle. What do I expect here? I want to see this candle being manipulated, okay, by this candle. Then we now continue bearish. This is what I expect. Even if we go for this yesterday's low, no problem. Okay. Yeah, that is our anticipation on GU, on GU, on GU, on GU. Not unless we have another, but that's what I expect. Why do I say so? Look at this candle. It never formed the low. It never formed the low. So what is happening? We are going to past this high, manipulate this FVG, then continue to the downside. That is what we expect. That is what we expect. That is what you expect actually. And here is it's all about patience. It's all about patience. You have to be patient before you enter the market. You have to be more patient than anyone else. So let's wait for the manipulation there. We are still waiting for the manipulation on that trade fair value gap. So once it's manipulated, that is when we'll sell this market. On EU, we are selling. So on GU, we also expect the same. Today is Friday and we are closing actually. We are closing the week. We don't expect it to rise above this level. No. We don't expect it to go beyond that level. So what we want is just to see this the 9 a.m. The 5 a.m. candle close below that 1 a.m. range. Then we sell. So let's keep watching. Now that the 5 a.m. candle failed to manipulate that candle, let's wait for the 9 a.m. candle to do that work for us. And when you're trading, don't change your strategy. So we are still here is all about patience actually. Just waiting for manipulation here. And then we continue selling. This is a hourly time frame. This is the hourly time frame for GU. So as for now, we expect the market to rise a little before it drops. Then boom. That is where we are expecting it to be at. As for now, let's keep on waiting for the manipulation. Don't be confused. This candle has not yet reached this level, but I know it will, because we still have time. We still have more time. The block is right here. So this one is like our accumulation. So we wait for the manipulation right here, and then we drop to the downside. One day we'll pull more crowd. Today it was just but the beginning of it. We're just starting, but with the no time we'll be able to have more audience, and I love that we have more people around so that we can share the idea, we can continue trading together, form a community actually, from our Discord, from our Telegram, from our X together. Yeah. So we are just waiting for the manipulation on this FVG right here before we continue selling. So if I were to mark the order block, I'll mark this order block right here. Then I will have to enter right there in the middle. Stop loss right there. Take profit. Right here. So we are waiting for the manipulation here before we continue bearish. Yeah, we might go up to this level actually. Now today being a Friday, we are closing the week, so we don't expect the market to continue bullish. Okay, and you have to keep in mind that whenever you analyze your market, just know that the market is always right. So you might fail to understand. I'm seeing an order block here. And I told you a valid order block always has what? A liquidity sweep. So this cannot clear liquidity right there. Okay. Yeah, that's a valid order block. So this one will act as our inducement. Our inducement. So this is the analysis for GU. Then for EURUSD, yeah, actually look at this. What happened on the 9 a.m. I told you we are waiting for the manipulation. Then we sell off. There we go. This 9 a.m. is the determinant. So if it closes below this range, then we go sell. I'll have to post the pictures of this analysis later on, both EU and GU, so that we may understand what was happening or what happened. So I'll be ending my live today at that. So I'll come with the results later on. Thanks for the follow. Thanks for love. Subscribe to my channel so that you can get the notification when I'll be live again or when I'll be posting. So I'll end my live at that. I'll post the pictures of these trades later.